And welcome back to Central Valley Talk. We're meeting people all over the state. It's our COVID edition. We've had COVID editions every day, talking to people all over the state, all over the country, of course, all over Fresno and the Valley, about what's going on, how the virus is affecting you, how is the virus affecting your industry, et cetera, et cetera. And we reached out to John. I already forgot. John, help me out, Michael. John Grace. He's in Westlake Village. Hey, John, you're on the air. Westlake Village, California. Now, what's the name of your company?
Investors Advantage.
Yeah, and one thing we've been talking about how the COVID's affecting the market, how COVID's affecting different people differently, how some people are doing worse, how some are doing better. Just give us in a nutshell what's going on.
Well, what I said to a good friend of mine is, how this whole thing happened? It was the rich people who did it. I mean, let's just understand the rich people have passports. They get on airplanes and they get on cruises. And they didn't do this on purpose. But we, the rich people, got on a plane or a ship, went to go get this virus and bring it back to the poor people. The people serving your food, the people who are handling your bags, the people driving you back and forth to the restaurant or to your house and to the airport, and then the people, the EMT folks. So it's been the brown people, if you will, who have brought the major part of what's happening from the standpoint of impact. So, as I said to my friend, you're in the top 1%. God bless you. I know you want the economy just to go back to the way it was. But I just need you to understand that's fine for you. It's just that people who look more like me are not having as good a time as you're having right now.
Yeah, and I'm not one of the rich people, so don't blame me for the virus, you guys. But
well, I said it's the rich people. Anybody who has a passport.
Yeah.
So we're all rich, according to the people who don't have passports. You see what I'm saying? From their perspective.
Yeah, but most of us were just sitting around doing our job. Somebody went overseas, got the virus, and brought it back to us. And now our entire economy is suffering. But it's your viewpoint or your point is that some segments are being hit harder. Or
100%.
Even some ethnicities are being hit harder.
Yeah. I mean, when we look at the data, that we see that the Black people, Native Americans, Latinos are dying and contracting the illness disproportionately. Now, and it's having a negative social, economic, and mental health effects thanks to the coronavirus.
Now, are you saying economically disproportionately or physically actually getting the virus disproportionately?
Yes and yes.
Okay.
Yes. So, when we talk about, this is the best economy ever, what I like to say is let's look a little closer under the hood. Is there an engine? Is it a 4-cylinder engine? Is it a 12-cylinder engine? So if you're in the top 1%, 4% increase is pretty meaningful. But if you're making less than $40,000, and by the way, the average household income for the average in the country is about $66,000. For Caucasians, it's about $70,000. For Latinos, it's about $50,000, and for Blacks, it's about $40,000.
Yeah.
So
interesting. I just read that article that those exact numbers last week in our local paper.
Yeah, the numbers are mind-boggling. I mean, they just are. They're statistically staggering. There's no question about it. And I think what happened is that we got into what one gentleman calls in his book the Marik Meth, right? That we're all moving along, we're making progress, and we're doing better than we were. Well, it depends on who you are. That's why I say we have to look a little deeper under the hood, closer under the hood, to see, does that apply to everyone? Or is it the case that, the people with the yachts are really enjoying life, and the ones who are left on the sand without a boat, right, they're not enjoying a rising sea, they're not on the sea.
Right. Now, are you talking about before or after, or both?
Both.
Pre-COVID, post-COVID.
Correct. And I think the COVID has been maybe nature's way of getting us to slow down and actually look at each other and deal with each other and talk, have an honest conversation where we might actually learn, to slow us down to see what's going on, to maybe give us a shot across the bow to say Mother Nature, right? It's Father Time and Mother Nature. Those are the two trump cards. And I mean, sometimes Mother Nature may be saying to us, let me get your attention. Otherwise, we'll just shut this one down. We'll have an ice age. We'll have a firestorm. You guys have got to go because you don't know how to act.
Yeah. Well, you talk about the rich people, they're being affected one way, but also rich people invest in a lot of services and keep people working, and everybody below is kind of out of work right now.
Yes. But in terms of percentages, like we talk about, this is the best stock market ever. It's I believe it is about, for Caucasians, 60% of white households own stock. When it comes to Latinos, I think it's all of 31%. And for Black people, it's all of 28%. So clearly a good portion of the American, in fact, the part of America that's growing in numbers as opposed to declining, we're not at the party. We're not even at the door. So we see a party going on, but we're just not included.
Yeah. Is there a solution? Is COVID going to help towards a solution or hinder the solution?
I am optimistic that it's going to help us wake up, stop being Rip Van Winkle, stop just reading the headlines and not doing any critical thinking. It's going to cause us to have conversations where I actually ask you, how are you feeling? Or as opposed to being absolutely arrogant as heck and telling you how you should feel and how life should be for you, as opposed to asking you, how can I help? What is it like? I don't have your background, but I'm curious about it. We're all in this together, and I think the more we recognize that and deal with it and see what we can do about the issues that we are facing, it's not like they're going away, and in fact, they're growing exponentially. A lot of uncertainty everywhere you look.
So I guess you could also say disproportionately certain classes of Americans are benefiting from the COVID. Like people with stock are doing better than those without, I guess.
That is correct. And one of the things that we're seeing is a lot of new money coming into the stock market. But I think this is money that is primarily people who can't go to the track and can't go to Vegas. These are gamblers. These are not investors.
Yeah.
Now, I will say to you, when we see that behavior from time to time, it's not a good sign because these folks are just in for the pop. They want the profit, and then they run for cover. So that may be what has helped buoy this market so far this year. By the way, even though it's been a great gain since approximately March 23rd, we're still in negative territory for the Dow and the S&P.
Right.
Only the NASDAQ is up so far this year from January 1 through today, last time I looked. But to kind of put it into perspective in what you were saying, after the Great Recession, we saw, this is the net worth decline thanks to Pew Research. And for Caucasians, they found that the decline in net worth was 16%. For Blacks, 53%.
Right.
For Latinos, 66%.
Yeah.
Now, that's long before COVID. You understand what I'm saying?
Right.
But if we do the math, if you're off 16, 17%, whoever you are, you only need about 20% to get back to even. When you're off 53, it's more like 113%.
Yeah.
And if it's 66, you need 194% gain just to get back to even. Now, you tell me, other than the top 1%, who saw that kind of exponential gain in the last 10 years?
No, most have not. So
did not happen.
Now, I want to ask you in a minute about the housing market and inequities there, or what's going to happen there next. But one thing I said earlier was pre-COVID and post-COVID. We're not post-COVID yet, I guess.
No, we're not.
So, but tell me about your company and how you get involved in this, or how do you want people to call you or reach out to you or get involved with you somehow?
We're happy to help. That's part of the reason why I'm here, because I see so many disparities and I see so much despair. And to me, if we're going to talk about capitalism, it should not just be for the rich, it's for everyone. Right. But if we don't see the doors and we don't see how we can play the game, we don't play the game. And for us, one of the first steps, Mike, is to help people discover not where you can put money to make a gain and feel good about it. The real question is, how much money do you need behind door number one at the time that you received your last paycheck, so that I can have the same standard of living for the next 20 or 30 years without another paycheck. That's the first job. Like I say, the traders are nice, they've added a lot of money to the equation, but they're not investors. Everybody's in for the pop. We want people to look at it. Look, you're going to live to 100. Now, how can you afford to financially live to 100 and want to live to 100 if you run out of money right after you get your last paycheck?
Well,
So that's first and foremost.
well, a lot of people know their job. They learn a trade as a plumber. I went to college and didn't learn a lot of anything. They don't even know how to access all this that you're talking about, or where to even begin. Is that what your company can help people with?
Absolutely, absolutely. I mean, we're very blessed that we work with those who actually live on $40,000 a year and those who have income of over $1 million. So we get to see everybody's situation, and we get to go through their checkbooks and see how they're doing in reality. So we like to sit with folks and help them see if I'm going to live to 100, how much money do I need after I retire at 65 or 70? And if we die, one of the breadwinners dies too soon, how much is the survivor going to need on either side of the equation, so that the survivor can miss the person maybe, but not miss the money they used to bring into the household. We just had a conversation with a couple where, he's making like $85,000 a year. And right now, if something were to happen to him, she'd have to figure out how to live on maybe half that. Well, we can make up for that difference, but we have to see the target, as opposed to saying, well, I'm worth more dead than alive. I've got $500,000 worth of coverage. I don't make $500,000. So, sweetheart, you're going to be rich. She won't be rich.
Well, I'm glad you're the expert on that, because I don't have time to be an expert or figure out all this stuff. And I was trying to figure out what you do, and I'm asking, what's your web address? I'm typing it in, and you go, oh, Mike, just type ybpoor.com. ybpoor.com. I go, I'm thinking I'm beginning to get it. I guess people go to that website as a starter.
Absolutely, absolutely. We're happy to set up, any kind of conversation that makes sense to you, so that you can feel like, we got to figure this out, and I think I can, and frankly, you must. But that's part of the challenge. In America, we have champion spin, baby spin. All right. And for example, the debt level today, whether it's consumers, whether it's corporate, or whether it's government, is higher than it was just 10 years ago. So what that suggests to me is the situation has gotten worse. We've gotten into more debt, trying to make it look like we're doing just as well as we were when we're not. And at some point, the music stops, and everybody's got to get off the carousel.
Yep, I've seen that happen a couple times in my generation. Tell me, we didn't get to talk about the housing market. It's a good time to buy. It's a bad time to buy. Are interest rates high? Are they low?
Well, I mean, look, let's just look at baby boomers. When interest rates were double digit, what were boomers doing? Literally standing in line across the country to buy a house at 14, 15, 16%. If you had told any boomer that 2.5% to 3.5% money for a 30-year loan was in your future, they would have laughed you out of the house. Well, did you notice we just got to that major piece of the equation, and nobody's standing in line to buy a house? So we've been told, I would say, we've been led to believe that interest rates, location, inventory are the things we're supposed to pay attention to. They're important. But the primary driver, Mike, is looking at the buying and the selling behavior of ordinary Americans. So here it is. This comes from the U.S. Census Bureau, so we didn't make this up. 31. How old were you when you bought your first house? Most Americans were 31. How old were you when you bought your biggest house? Most Americans were 41. So boomers, 76 million people, can go box 1, check, box 2, check. Where do we go from here? Let's go back to the Census Bureau, and guess what we find? 78 is the age at which most Americans sell their homes. 78. Boomers are now what? Not born 46 to 64. So that makes us roughly 55 to 74. I think that's in the ballpark. So we're 4 years out from massive selling over a 20-year period.
It could be a giant dumping of inventory.
Well, exactly. So, at some point, supply and demand prevail. And if it is the case that 76 million people, 24% of the population, have to go to heaven, and the inventory over the last 130 years remains pretty much the same, I think it's reasonable that prices and rents are in decline.
Wow, because there's going to be an excess of houses.
you don't have 76 million people coming from Mars or China or Korea or wherever to replace the 76 million people. Look, there's been only one time in the world and one time in America where 76 million people have come into the equation. Legal, illegal, legitimate, illegitimate, only one time. So I'm going to submit to you that that's what caused, prices to be at these nosebleed levels, but we don't see this happening again. So the demand of all these people needing someplace to live, it's reasonable that prices would get higher than one imagined. What do you imagine would happen when the demand goes away?
Right.
I think prices are going to follow that trend in terms of being certainly less than they are today. So
basic economic theory.
Basic economic theory, yeah. So for if you don't care about what the value of the house is or the equity, then who cares? But if you're, a millennial, for example, our counsel is, again, if you don't care about the down payment, it takes you 2 years and then the price declines. And by the way, I wouldn't be surprised to see prices on the left coast drop maybe 60% from here, and on the right coast, 50% from here. If you don't care, go with God. If you do care, you might want to take some of that equity off the table while you can. And if you're a buyer, I'm going to submit, maybe you want to keep your powder dry. Don't rush out to buy, because remember, when the boomers were stepping up at 16%, all that demand meant that you could, by the time you closed escrow, the house went up in value.
Right.
That's not happening right now because the demand is certainly less than it has been in the past. So let's see what prices do, but maybe you just keep complaining about the rent and don't buy a darn thing to see if prices move in your direction, because now you may find you can actually shop, like it's really a bargain. It's on sale. It's certainly less than it was.
Well, it sounds like maybe you're saying those who've been kind of left out of this great giant economic boom we had in the past, and they're making $40,000 a year, while other people are making 60 or 80. They need to be ready for when this happens.
100%.
Yeah,
100%.
okay.
And to your point, because as I said, we don't like math, we don't like budget, we don't like recession, we don't like depression. We got to study all of that, okay? And here's the good news about the Great Depression. On a per capita basis, more Americans became millionaires than any other time in history.
Yeah.
To me, that's good news. If it happens again and we're ready now, whether it's a business or, a plant or a home or, stock, if the price has become more attractive, you buy more shares when the price is cheaper, as opposed to holding on to equity and watching the price decline and then praying that it comes back to even before you die.
Yeah. Yeah. Well, listen, our guest is John Grace, Investors Advantage, and I'm going to go to that website, ybpoor.com. Is that where people should start? Go to the website?
Absolutely. And poke around there a little bit. Look at a couple of interviews. Also look at some tools we have for people to see, what happens if $1.3 million drops 50%, and now you have to retire and your odds of success go from 83% to 0. Let's help you understand what kind of risk you are willing to accept. I don't expect you to know that. We'll help you figure that out, because then if your portfolio performs within your private risk ratio, you don't much care what happens with the stock market as long as your pot is intact.
There you go.
That's the question.
Yeah.
And unfortunately, most of us simply keep saying buy and hold, sit and take it, hold and hope, ride it. Well, when you don't need the money, you can do that. When you're young, you can do that. When you start taking withdrawals, you want to limit the losses.
Limit the losses. Okay, well, go to webpoor.com, for goodness sakes. John.
Why? WHY.
Yeah. John Grace knows a lot about this stuff. I don't have time to learn it, but he's taken the time, so let's use him because he knows what he's talking about. The last thing you want our viewers to know, John?
Well, don't get complacent. Please do your homework. Do until you understand it, don't put your money anywhere. Know what your target is, both to buy what you're buying and to sell what you're selling. But you want to look at it basically, if we live to be 100, how much money are we going to need? And if we're already retired, how much, of our assets can we afford to see a decline? In other words, like if you have one couple, we have $5 million. Their income is $200,000. Great lifestyle for them. But the last thing they want to have happen, or they can afford to have happen, is to watch $5 million drop to 2.5. Now, to keep the same income at 200,000, we would have to move the withdrawal level up by twice as much, from 4% to 8%. With 50% less and an 8% withdrawal, this plane's coming out of the ground and it's not going to out of the sky, and it's not going to be pretty.
Very good. Well, I can't say I understand everything he's talking about, but I can say that I should and I need to understand what he's talking about. I'm at the end of the road here. I'm going to be 60 something, and I don't know what's going on. Stocks are up and down. Retirement's coming and going, and it's a very volatile time. But I think John's saying, look at what happened in the past and use that as an overlay to figure out what's going to happen in the future. And it's not all a guessing game, is it?
No, it's not. There's a fair amount of guessing, no question about it. But there are ways to put more certainty in the equation as opposed to be completely unknown.
Yeah. Well, I want to thank John. I want you to come back every month or so, and we'll talk about this some more, if that's all right.
Look forward to it, Mike. Yeah, sure. Absolutely. Happy to.
And John Grace, Investors Advantage. The website is ybpoor.com. Thank you, John. We'll be back with more Central Valley business right after this.